It is time now for Futures in Focus. When you look at oil, it is holding near its highest level in 4 months after jumping about 16% in April on speculation that unrest in Yemen could spread and threaten oil shipments. Joining me now from the CME with his view and outlook is Philip Streible. He is senior market strategist at RJO Futures. Philip, NYMEX crude fell 0.3% last week. Was that just a pause in the recent gains, or was it firm resistance to the recovery in prices?
Yeah, it was just a little bit of a pullback. I mean, we were seeing oil, like you said, it was up 16% on the month. We do got that Brent crude oil. It's up near its highest level in the year on those renewed airstrikes that started again on Friday in Saudi Arabia. But if you look back at the U.S. here, you've got the mounting expectations that the U.S. oil shale production may have peaked, and we could see a pullback in the coming months. There's also been an ongoing decline in the number of rigs out there. We've got the latest rig number was down 31 last week to 703. It's at its lowest level since 2010, and we've seen a decline for 20 straight weeks. So I'm quite bullish on crude oil. I'm anticipating that prices, they have a temporary small setback here in the next couple days on some larger builds in the stocks, but I think a pullback to 56, it may warrant investors looking at buying. I would put a stop loss down at the 54 level, and my target is a push up back up through 60.
A pushback up through 60, yet if you look at how it's been doing, it's been kind of stuck in this range. It hasn't been able to top 58. Why the range-bound trading over the last few weeks?
Yeah, well, I mean, I think that it's this push and pull. There's a lot of people out there that are still bearish. They are looking at those numbers. I mean, the U.S. is still producing at one of its highest levels since 1980, and we could see, a lot of the inventories. There's a lot of talk about, hey, we're running out of room. We're running out of room down in Cushing. So inventories are quite high, but I think that we've got to make up some of that lost supply on gasoline. Gasoline stocks are running at a 5-year low, and I think that refineries are going to need to replenish that. So where are they going to get it from? They're going to use up some of that crude oil, and I think that's where we see the push through.
All right, that's a really great overview of the push and pull factors here. Let's not forget, too, that the super major oil companies will be reporting earnings this week, like ExxonMobil, like Chevron. What do you anticipate to learn about their spending plans and the impact that might have on prices?
Well, I think that they're still tightening up the ship here. I mean, they're looking at, you're seeing a lot of contraction in some of their workforce. You're seeing them focus a little bit more on those wells that are most important, or producing, the best crude oil and the highest levels at the lowest cost. So I think that there is a small contraction here, but I think that going forward, you're going to see those dividends start to increase again. You're going to see traders come back in and start going long some of those stocks.
Okay, maybe just not this most immediate quarter. Philip, of all the indicators that can be used to determine whether this rally has legs, whether it's for real, how high does the strong dollar rank?
Well, I still think that crude oil is going to push up through that, up to about $65 at the end of the year. I mean, you look at this tight consolidation pattern that we've had here. We've come up to about that 58, 59 level, and then we start to back off. That breakthrough there, you're going to see a lot of stop losses get hit, and I think that's where the momentum carries forward.
Okay, gotcha. What's your confidence then that U.S. shale production has peaked and could start to decline, at least level off and then decline in the coming months? What do you need to hear from the big oil companies to convince you of that?
Well, I still think you need to hear that, they're going to reiterate those facts, and I think that the rig count number, I think, is the most forward-leading indicator, because when you start cutting them off, you're going to see that production decline coming months out. So I think that Friday's number out of Baker Hughes, I think that that's very important. I think that the oil companies, they're going to discuss that as well, and I think that's what you look at.